Bill Press.
Good morning, everybody. Great to see you. Hope you had a fun evening last night and got out to enjoy some of the fine cuisine and the great fun music of New Orleans. I know that sometimes you're coming to a convention like this and we all tend to get in a bubble and so involved in the activities of the convention and the meetings and the speeches, you sometimes lose track of what's happening in the outside world. I want to bring you up to date quickly on some breaking news this morning on 3 fronts. The Labor Department has announced the job numbers for September: 148,000 new private sector jobs created in September, and the unemployment rate dropped to 7.2%. Good news for all of us. Gradually, slowly, too slowly, unfortunately, but we're continue to move in the right direction. The other bit of news is that President Obama, 21 days after the launch of the health exchanges, 21 days later, President Obama finally came out yesterday and said he was disappointed in the rollout and in the glitches with the health exchanges. It took him a long time to get around to that. He said he was pissed at it. He's going to get it fixed. But the problem the White House keeps insisting is that so many people came to the website. As a person who covers the White House every day, what I want to know is, if for 5 years they've been saying that millions and millions and millions of Americans want to buy health insurance, why were they surprised when they launched it and millions of Americans tried to buy health insurance? You think they might have figured that out ahead of time. All I know is, if that was one of your banks, you were launching a new product line, a new line of service, and you hired somebody to do it, and this happened, heads would roll. And I hope some heads rolled in Washington because of that and what happened. And finally, I want you to know the new poll out this morning, ABC Washington Post poll reports that the approval rating of Congress is the lowest it has been in 40 years. It is now down to 12% approval. In other news, 12% of Americans are either related to a member of Congress or on the paid staff of a member of Congress. By the way, also in the poll, 85% of Americans disapprove of the job of Congress. And in USA Today, I love this, 47% of all Americans and 52% of all Republicans say we'd be better off if we cleaned house and sent the whole damn bunch home and elected a whole new bunch. So you see, I think 2 lessons there. One is Americans are pretty smart. And 2, I know the people in this room have taken an unfair beating over the last few years, not because of anything that you did, because of the antics of some of the big guys up on Wall Street. So when you are feeling blue and feeling bad about public perception of this industry, it could be worse. You could be a member of Congress. Now, we continue this morning with the great theme of this convention, the next steps for changing the future, getting back to banking, as we said. And today, the next step we're focusing on is new customer expectations, the customer experience. And to lead us through that, please welcome good friend, your vice chairman, the president and CEO of First Bank Holding Company out in Lakewood, Colorado, John Eichert. John, take it from there. Thanks.
Thanks, Bill.
There you go. Take your panel. You got it.
Great. Thank you very much. As we move forward with customer expectations, what we've found is that with the new regulatory environment, we have been put in a position of being really adverse with our customers. We are the ones that get to deliver the bad news, and I think I've spent more of my life, the last couple of years, trying to avoid kill the messenger versus actually dealing with my customers. And hopefully today we'll have a good panel discussion to talk about that. What we have here is 4 very distinguished CEOs that represent different parts of the country, different operating models, but we're all dealing with the same thing. So what I'd like to do is start off by having each one of the CEOs, there'll be a background information on sort of their footprint of their operation and talk a little about their company. We'll start with Melanie Dressel. Melanie?
Thanks, John.
Good morning, everyone. Columbia Bank is headquartered in Tacoma, Washington, in the Great Pacific Northwest, in the real Washington, I'm proud to say. Our company started about 20 years ago. We have $7 billion in assets and 146 branches located throughout Washington and Oregon. We specialize in banking small businesses, the business owners, and their employees. And we're proud that we have a very diversified loan portfolio that's funded by core deposits. About 92% of our deposits are all core. We have grown both through strong organic growth and acquisitions. We've done 11 acquisitions over the 20 years, including 5 FDIC acquisitions between January 2010 and August of 2011. And our real goal is to be the best Pacific Northwest regional community bank.
Thank you, Melanie. Our next panelist is John Hairston. John is the co-CEO and COO of Hancock Holding Company. John?
Well, good morning, everyone. I'm proud to serve this great nation at your side. Sometimes we have to remember that as bankers, we are really the good guys, despite what sometimes the media headlines portray. Hancock Holding Company is a $19 billion financial services organization. We are regionally headquartered within a 90-mile radius of the city of New Orleans. We operate between Houston, Texas, and Jacksonville, Florida, along the Gulf of Mexico, and then down to Sarasota in Central Florida. We have had a massive amount of growth here since Hurricane Katrina. We entered the winds of that storm at a little under $4 billion and have gone to 19 in this very, very busy 8 years through a combination of organic growth, one FDIC acquisition, and a conventional acquisition. And again, proud to serve at your side, and welcome to New Orleans.
Great. Thanks a lot, John. The next panelist is Harris Simmons, Chairman and CEO of Zions. We actually compete with various Zions entities out in the West, and really one of the premier banks in our region. And Harris is also a past ABA chair. Harris?
Good morning, and thank you very much, John. Zions Bank Corporation is about a $55 billion bank holding company. We operate through 8 different banks around the West, from Houston to Seattle, and we characterize ourselves as a collection of great banks. We have about 480 locations and try to operate very locally as a group of community banks throughout the West.
Great. Thanks, Harris. And our last panelist is Frank Sorrentino. Frank is the CEO of ConnectOne in Englewood Cliffs, New Jersey. Frank?
Thank you, and good morning, everyone. Thank you. So some of you may know our former name. We were North Jersey Community Bank up until this past year. We were a de novo startup in the year 2005, and over the last 8 years, we've grown to over $1 billion organically, making us the fastest growing bank in the state of New Jersey. I'm not sure what that says about the state of New Jersey, but that's who we are. And our business model is a simple one. We serve a market area that, if you were to stick a pin in New York City, probably ranges somewhere around 40-mile radius around the city of New York. That gives us the great distinction of running into just about every single banker in this room. Everyone has a branch in that marketplace, very competitive environment, yet we were able to grow pretty dramatically even through the crisis. So that's ConnectOne Bank. We had our IPO this year. We changed our name. We were the first IPO since 2010, I believe, which was very well received, and there were many IPOs that followed after we sort of broke the ice for them. So,
Great. Thanks, Frank. As you can see from the footprints, we pretty much cover the entire United States with this panel. And even though we're very diversified geographically, we all have the same issues with customers, the same issues you would have. And I think these new regulatory environments, when we talk to our customers about how we complain, we don't want to whine, but quite frankly, it's an issue. And customers really don't care. They don't care until you say no. Once you say no on a loan, and all of a sudden, hey, what's the issue? Now I care. So, Melody, in a sense, how do you deal with customers, and how do you raise the expectation or actually get them to advocate for your position and to show that you're not the bad guy, don't kill the messenger? How does that process work in your bank?
Well, it was a really big concern of mine as we were doing acquisitions, the 5 FDIC acquisitions in particular, because it extended our geographic footprint quite a bit. And I visit all the branches once a year, and the feedback that I was getting is, we think that we're becoming a big bank. And that is not our mentality. That's not what we want to do. And as I drilled down more and more into it, what they were really worried about is that we were starting to use our direct loan center more and more, and really encouraging that small business lending go through that channel, our consumer lending go through that channel. People were required to get signatures on just about anything, even though they really knew their customers. It wasn't good enough anymore. And it dawned on me that they had the misperception that we were getting bigger, when in fact what was happening is we were complying with the new regulations or extended regulations, and that we had not done a good job of talking with our own employees about the consequences of the new regulations. So I and my team really were very directed at educating our employees about what the new regulations meant. We were going to be very compliant. It didn't mean that we were going to rock the boat, but we wanted them to be the ones that had the confidence to explain to customers why they were seeing some of the changes that they were in how we operated our business. And actually, I think that it's helped in many respects, because I've got a group of employees that really are engaged in what's going on in our industry. I think that we need to do a much better job educating our customers and use every opportunity that we have to be out there talking about the consequences of the regulations, not whining about it, but just educating them. So I'm on a mission.
John, you had a quite different customer expectation back when you pretty much lost your entire network of branches, locations back during the hurricane. Tell us a little about how you met your customers' expectations, how you really rebuilt your whole system, and how you actually kept them in the know during that period. Well,
that's a great question, and it's a great story. It's hard to answer that one in such a short period of time. I'll do my best, John. When Katrina came ashore in the late August of '05, it went just south of New Orleans, across the boot of Louisiana, and then into the coast of Mississippi, which was the perfect strike to affect virtually the core of our entire enterprise. And so we lost, either through the facilities being slabbed. Slabbed is now a verb that means there's nothing left but the slab. That was a new word after Katrina, slabbed. The facilities were either slabbed or rendered uninhabitable due to damage or weakness in the structure. That was about half of our locations. We lost 4 of our 5 corporate headquarters building, and the one that was left was only the training center. And so if you can imagine, as bankers, your call center, your technology center, central underwriting, everything from audit, which doesn't have to happen every day, the day of a hurricane, all the way through your call center, which does, was gone in 10 hours. And when I say gone, I mean gone. We thankfully had a great enterprise risk management program, particularly for technology and the network, and were able to resume systems out of SunGard in Chicago within a couple of days. But what we didn't anticipate was the massive impact of the storm on the infrastructure, particularly governmental and transportation. And so we found ourselves one of a very few number of banks that were open the day after the hurricane, and you have these hundreds of thousands of clients, both our bank and other banks, who some of which approached a location that was open. Most of the time it's on a folding table outside what was left of a branch, needing cash to get their family out of town, to get them to somewhere else where they can resume their lives and rebuild. And you had to trust people. And probably the most remarkable story of the storm, my favorite part, is the resilience of our associates in the company to do what they had to do to resume operations. But the most important thing we learned was that this is still really a very trustworthy nation. And despite the amount of time we have to spend to guard against risk and bad people, the vast bulk of Americans, both individuals and businesses, are still trustworthy individuals. And we opted to give cash, and we couldn't identify folks. Some of them swam out of their house and didn't even have clothes, much less a wallet or a purse. And so we issued $500 to pretty much anybody that came in. That was I don't want to tell you the number, but it was a little south of $100 million worth of cash we went through that first week. I think we wrote off a little under 800 grand. And we picked up in many markets 5 or 6% market share. And people believed in us after that because we believed in them. So that began our pretty rapid organic growth in this region, and we chased it with a couple of acquisitions. But the most important takeaway from that, what I would suggest is no matter how good your technology recovery plan is, no matter how good the processes are and how well your people know them, what's most important is that your people believe in you and believe that you will take care of them and their families the way they take care of the company. And so when they meet that adversity and all they have to make decisions on is the values and the culture of the organization, that they know what those values and they know what that culture is. And then they know that as long as they make decisions within the values of that company, your company, then they're going to be treated fairly when we kind of count where we've made good decisions and bad decisions. So the most important takeaway was knowing the values of the company, having a good clear chain of what responsibilities and authorities are when you can't communicate up the chain of command, and then just having the heart to come into work when it's a really bad day and do your best for your clients. And we were rewarded handsomely for that.
Well, I think that's evidence that we really are the white hat industry. And I think in John's case, I'm sure he has customers for life based on that. And that's a great example of bankers really stepping up and having faith in their customers and really not knowing whether you can get paid back on some of those credits. So obviously it turned out really well for you. Harris, Zions, I've always pictured Zions as being a very technologically advanced organization. They were doing stuff 15 years ago with e-signatures, which I was kind of fascinated by. So I guess in terms of technology, I think what we do as banks, we're doing everything we can not to talk to our customers face to face, which is kind of intuitively the wrong way to go, but efficiently it's the right way to go. So Harris, talk a little bit about technology. Where do you see that going? Where are you using it? And I think it also maybe dovetail on Melanie's conversation. People want technology, but they also want that human touch when they need it. How do you meld those two issues together?
Well, the first thing I'd say, I think that, boy, the way we all have to try to distinguish ourselves from some of the largest players is through relationships. And I harp on that just continually. Our structure tries to foster that. We try to keep management teams local and close to customers because we want to build really deep relationships. But I also think, you know, at the end of the day, we are in an information business. We don't have semi-trailers, tractors that pull up to a dock every day and haul goods that we've manufactured out to customers. We produce information and decisions based on information. And so, you know, we live in such an extraordinary time with the technologies that are available and the channels that we can reach customers with. That I think that's becoming a really important part of the relationship. Some of the things that we're doing currently, we're embarking on a sort of a major investment program in a new suite of kind of core application systems, loan and deposit systems that, among other things, will allow us to process in real time. One of the things that I tend to believe is that we are fundamentally a batch industry operating in what has really become a real-time world. And I think that that's going to be one of the defining characteristics of kind of change over the next decade, will be a move toward more real-time processing of transactions. Being able to have a much more complete and holistic view of all of a customer's relationships with a bank is also one of the things that we see technology providing. And the other thing we've been investing in is treasury management. A lot of our business is commercial. We do a lot of small business lending. 2/3 of our loans are under $5 million, and they're to businesses. And we see a lot of need for treasury management products for small businesses. And so that's another place we've been investing.
Frank made a good comment. We were talking about technology, and I have found that I've probably burned up more money chasing a bad IT project than I ever have on bad loans. Making a bad IT decision is a bad decision that stays with you for a long time. Loans you charge off, you move on. Frank, you had made a comment about what technologies are bankers chasing right now that maybe aren't going to be productive, aren't going to be efficient, and maybe we all kind of get the aha moment, like we love technology, but what areas do you see as maybe banks are, quite frankly, wasting their time, effort, and resources?
So the way I like to answer that question is that, for every bank, there's sort of a methodology for your own individual institution. And there really isn't a one-size-fits-all. I mean, I've gone to some of the breakouts here over the last day or so, and I hear about this product or that product, and they all sound really great, but I think you're not going to find a silver bullet. You're not going to find, you can't call up or go to Amazon.com and order IT in a box and say, okay, it arrived, give it to your staff and say, here, let's implement this stuff, and we're going to just be able to compete with everyone else in the marketplace, and we're going to be better than everyone else. That's not how it works. And I wish it was that simple. I've heard bankers talk about, I'm going to hire a 24-year-old kid, and I'm going to let that kid run our IT division, and they're going to get us up to speed in social media and technology and all different kinds of imaging and whatnot, and they have no idea what they're talking about. And yet they're going to go out and they're going to do this with their institutions. They're going to commit to spend an incredible amount of money to do things that may or may not align with what their mission statement is. Like Harris said before, our mission, is to be a better place to be. We start out with, we're a community bank. And we do all the things that every other community bank does, right? We shake hands, we go out to the marketplace, we meet our customers, we hug people, we kiss babies, we do all that stuff. But at the end of the day, we have to be able to process our business in a way that makes sense for our customers. So when we started to reach out past what our branch network would support, you needed a product like remote deposit capture. And I saw that as a tool very early on. Today, sitting here, we have over 650 remote deposit capture customers in a bank with $1 billion worth of assets. That's a lot. But that was a technology we thought made sense for our customers, for our business, and for the way in which we prosecuted our business. If all your business customers are walking in your branch every day, then maybe you don't need that. And you could take that test and you could take it through all of your customer lines, and you would see that two things happen. One, the customer will drive some of the decisions because they're products that they want. If your customer wants something and you're not willing to provide it, guess what? You're going to lose that customer. On the other hand, if you're, as Harris also said, I think the banking business is moving more to a technology-focused business internally. We transfer money, we transfer information. We need to be as efficient as we can. We had a little discussion here before about efficiency ratios. I think the future of this business is absolutely headed in that direction with lower and lower efficiency ratios. There's only one way to do that, and it's through technology. And so, but what does that technology do? It provides a better interface for your customer. It provides you a better way to be able to communicate with your customer. And so I'm not sure if I answered your question exactly, John, but I would tell you it is absolutely custom tailored to your own institution. Some people are really good with social media. Some people have their entire back office completely imaged. Some don't. Some people use mobile banking. Some don't. Doesn't make it good or bad. It really depends on who your client base is and who is it that you're trying to reach out to.
Frank mentioned the 24-year-old person doing your IT. We have lots of young officers in the bank, and I'll meet with them occasionally, and we'll get 10 of them in a room. We play the money game. They're between 21 and 25, and we'll say, okay, who has the most money in their wallet wins. Usually the guy with $4 wins, which means young people don't carry money anymore. That's just not what they do. And it's interesting that sort of that's that customer we're all chasing, trying to figure out what's really important to them.
Right, but John, the 52-year-old business owner who is going to come to you and look for his commercial real estate loan is not the same as that 24-year-old. Exactly. And so that person wants to come into a meeting, wants to meet with your lending officers, wants to meet with who's going to take his deposits, and they may wind up using technology to run their business and want it in their banking, but they want to meet with someone and they want to have that customer relationship. And so all I say is, if in our market, if you're in the Hoboken market, yeah, you're going to be dealing with ATM machines and young people. But if you're in, the market where our headquarters is, we're still dealing with foot traffic and people who are coming in and want to shake hands.
Well, as a rule, the 52-year-old guy probably has more money than the 22-year-old guy. Just a general observation.
I'm not sure about that.
General observation. Melanie, how do you use young officers in your organization to kind of test products and test and get feedback? And how empowered are they to really step forward and say, hey, let's do this, let's do that? How do you use your young officers?
Well, I just think that that we have this wonderful group of people who can really kind of do reverse mentoring, who are the 20-somethings that we're really, their peers are who we're also trying to attract. And we are forming a group that will actually be our proxy for our young potential customers who can really help advise us on those things that really do move the needle and attract the customer that we want. And it engages them again. It lets them know that their opinions are valuable. They probably see things from a little bit different perspective than somebody that is at my stage in my career. And it really helps them understand how we make money. And one of the biggest challenges I think our industry is going to face, and we're facing it right now, is not that we're going to be able to do away with all of our branches or branches as we know them. I mean, heavens, when I remember when the first ATM rolled out and everybody said, no more bricks and mortar, it's not needed. Well, obviously that hasn't happened. But we really have an opportunity to decide who we need to attract so that they can become the next in the chain of our customers who will eventually want to engage in other products and services. We have an older demographic base. We have a higher level of affluent clients. But they have children, and they are in line to run many of the businesses that we bank. And we need to be prepared to get those young people when they're first choosing their bank, because once they make that choice, it's just that much more difficult to get them to move. So great opportunity all the way around to engage young people in what we're doing and educate our older bankers on technology.
You know, as bankers, we've kind of decided that it's time to move on. We're not going to repeal Dodd-Frank. We can tweak the edges, but it's time to figure out, okay, what does Dodd-Frank say? What are these new mortgage rules going to say? And let's figure out how to work and how to make money with them. Move forward. I just think it's a much more positive way to interact. And obviously, we will continue to legislate and change where we can change. But the landscape, in a lot of ways, is starting to become a little bit more evident than it was a couple of years ago. And I guess, John, when you look at the new regulatory environment, how are you laying that across your organization? How is it going to impact what you guys do and what you don't do?
Boy, that's a great question. I think we all in the room, if we tried to survey the fastest growing areas of our banks, it may be a toss-up there somewhere between legal and compliance. That's the fastest growing areas of all of our companies. And I think pre-Dodd-Frank, I had 3 attorneys on the payroll, and I think I'm around 22 now. So it's become just a different industry. And as you said, it is the law of the land, but the interpretive work that the various regulators are doing has a pretty profound impact on how it really affects us. And I mentioned in the opening, just as a reminder, we are the white hats in the room. And somehow as an industry, we have allowed ourselves to be broadly painted with a few bad players, and our industry has been besmirched. And as I guess we're a professional industry. We don't rant and rave and scream and yell. We try to behave honorably. But we're in a guerrilla war at this point in time. And the other side isn't necessarily playing by the same rules that we are. And I would think, and our company certainly is doing this, and I would recommend it for the industry, is I think we have to play a little bit more aggressive ball, and we've got to push back. And we need to tell our story. And when we have these different fly-ins for Washington, I think everybody in this room ought to go. You ought to bring a couple of members of your board. You ought to bring a couple of customers. You ought to bring the advocates in your communities. for underserved sectors of your community so that they can help explain to congressional members, because the bad guys aren't the regulators. They're just trying to do what the law told them to do. The issue here is you have a Congress that doesn't understand what we all do for a living. And then at the end of the day, we are the industry that helps people realize their financial goals and dreams. And we're getting penalized for doing those types of good things. And there was a movie, a network, a while back that you remember. I guess we were all much younger then. There was a line that said, "I'm mad as hell. I'm not going to take it anymore." I think that's where we as an industry ought to find ourselves. And we don't have to yell and scream, but certainly we should be there and maybe bring 3,000 or 4,000 directors and clients and bankers when we go meet with Congress to help them understand at the end of the day some of the things that have happened to our industry that the consumers of this country are suffering for it. They're not benefiting from it. And in the effort to make things simple, we've made it more complex. So I think the first thing is we just don't have to lie down and take it and accept that with Dodd-Frank passed, that the regulatory environment can continue to make things worse for America, stymie growth of GDP, and know that the only way we can work our way out of this national debt crisis that we have right now is to grow the economy. And we're the engine that facilitates that growth. And so I think telling that story to those people we send to Washington to represent the entire country is very important. And I would hope that we all do a better job of getting in front of them. And ABA is the instrument that arranges those sessions. As far as what we do inside the company, I think it's also important to talk to our customers, and we do about 35,000 calls a year, and it's growing pretty rapidly, where we literally call our customers after they've had some interaction with the company, whether it's in a banking office or the call center or web or chat, and just ask them enough questions to ascertain if they were satisfied with the way they were treated during that conversation that occurred. How does it affect their overall loyalty to our company? And what's their likelihood that they would recommend us to their associates, friends, and neighbors? And since we started that about 4 years ago, it took about 3 months for our organization, the team, to understand that we really were doing that and we really cared what our customers thought about us. And then quarter over quarter, all three of those different indices, Net Promoter Satisfaction and loyalty, began to improve every single quarter for 3 years. And I really believe it was because our team began to appreciate that we really were there for the customers. We weren't there to comply. We weren't there just to interpret regulation. We were there to help our customers realize their goals. And in doing so, we wanted them to have a great experience, whether it was a tough conversation and we just had to be fair, or whether it was a good conversation and we made them happy. And I think it's made us a better organization. So I think the answer is be aggressive in pushing back, and then secondly, with our clients, listen to them and spend a little money in doing so.
Well, Harris, let's stay on the dark side a little bit here. I think as CEOs, we're all required to be a little bit paranoid. But when you look out potentially, whether it's the regulation, the economy, the issues that impact banking, what are the really issues and concerns that really come top of mind for you that keep you up at night? Well, I think I'm thinking a thought, and I just want to tag on to something John said before I answer the question, and that is, and I so agree with what he's saying, and I would simply add, I think that all of us need to be really focused on how do we make customers stronger. I mean, a lot of the problems that led to this last the big downturn were putting customers into products that weren't, typically not banks doing this, but getting customers into products that weren't suitable for them, et cetera. And in terms of relationships with customers, if we can always focus kind of culturally on how do we make customers stronger, I think that's a really good place to be. What keeps me up at night? I think that as an industry we've come a long way in the last few years. Capital is stronger. Typically, most banks are really liquid today. Fundamentals are really strong. Credit quality is good. Thinking kind of longer term, I do worry a lot about the cumulative impact of all the regulation, and particularly what it's going to do in terms of our ability to attract good people into the industry in years ahead. I think
and I've told some kind of senior regulators, I think that one of the big unintended consequences of becoming too elaborate in all of the, and kind of trying to micromanage this industry too tightly, is that it will lead to brain drain. And that good people will say, you know, I'm spending all of my time trying to figure out how to kind of navigate this minefield of regulations, and it's not satisfying. That's why in some respects, I think I like what you said about we've got to move on, we've got to deal with regulation, but we've got to be thinking really about how do we do good things with customers and make communities and companies and individuals stronger. And because if we get too mired in regulation, I kind of guarantee that it's going to have a big impact on the quality of the people working in this industry 20 years from now.
So Frank, what does banking look like to you over the next 10, 15 years? What's your bank going to look like?
Quite often, and you know, it's interesting from our perspective, being such a new institution, only being founded in 2005. You would think we would have like the answer, right? Because we're this new organization, we didn't have any legacy issues, we understand what's going on in the marketplace. But let me just remind you that in 2005, most of the banks in this room did not have online banking. There was no Facebook, there was no iPhone, there was no Twitter. It was a completely different world, and that was only 8 years ago. And many of the things and many of the processes and many of the products that we take for granted today couldn't have even been dreamt up just 8 short years ago. So to try to project 5 years from now or 10 years from now is pretty difficult, but I think a couple of things are pretty apparent. We will be a much more efficient business. People will look to their efficiency ratios probably first before they look to other things. You will have to engage in certain types of technologies to make your business more efficient. And I think that, as Melanie said, you know, the branch is not dead, but it will clearly play a completely different role in the future. I don't know about anybody else in this room, but most of our branches, and no one really likes when I say this, but you could roll a hand grenade in and the only people you're going to kill are my staff. So I think it's going to be a vastly different business model. I think at the end of the day, though, if we seek to take care of our customers and treat them with the way they want to be treated, provide them with the services that they want, and be able to do that in real time, and be able to do that across multiple channels, whether it's physically, whether it's through online chat, whether it's through a remote teller machine, whether it's via social media, whether it's however it is that the world's going to morph into, then that's what our business is going to be. People are still going to need loans. People are still going to buy homes. People are still going to start businesses. People are still going to do all the things that they do today, notwithstanding all the changes in technology. And I just think it's going to change how we deliver what it is we do. I think in the future, as has always been, but this will be even more important, your business will revolve around your people. And the organizations in this room with the best people will win. It won't be the organizations with the best technology. It'll be the organizations with the best people. I think it was Richard Branson who said that the three things he thinks are important for success are people, people, and people. So we believe that at our organization. We've been running ConnectOne Bank at a sub 50% efficiency ratio. We're trying to get it down into the low 40s. We're trying to take advantage of every possible technology that makes sense for our customers and our clients. And that's what I think I see going forward in the future.
You talked about throwing a grenade in the branch. A couple of years ago, or last year, I was doing an interview with a national publication. I made the comment, I said, if I didn't work in a bank, I probably would never go into a branch. And the headline said, First Bank CEO will never go into a branch again. I said, well, that's not exactly what I meant.
John, I always say that about my sons.
Yes.
My boys come to visit me, but they come to make a withdrawal,
yeah.
but it's not from the bank.
Oh.
And so, but if they didn't have to come visit me and say hi, they would never step foot in a branch.
Oh. Well, we have 4 kids, 19 to 24. You ask them to write a check, they're like, write a check? I don't write checks. You write me checks. And they certainly would never go into a branch because they have nothing to put in a safe deposit box. So, but I think that's kind of the way that young people go today. Let's kind of make, we have a few minutes left to go. Let's make this more of a positive ending. Obviously, we all are very optimistic about the industry. We're optimistic about our banks. Melanie, tell me a little bit about why you're going to be successful and kind of what you see as a real positive for your organization, both specifically for you, as well as the banking industry over the next couple of years, and why you're still in the industry.
Well, it's all about the people. I mean, it's absolutely all about the people, and that's what gets me up every morning and gets me off to work. It's, I work with a great team of people who not only depend on me, but they're there to support the direction that we're going. And I think that it is going to be challenging if we don't change some of the dialogue that's going on TV every night in the news that banks aren't willing to lend, that it's just all this doom and gloom. But I really do believe that banking is just an incredible career for young people. And I look at Jeff's family sitting down here in front, and I just see that as the future of our bank. But we have not found that people do not value a relationship with a community bank. Yes, they may choose to access banking services remotely, but at some point in time, the customers that we bank really do value walking through the door and getting to know a banker. And probably technology is going to force us to get out of the branches, out of the bank, and making sure that just because somebody has remote deposit capture and we don't see the controller of the company or the administrative assistant or something, we need to reach out and go to them and let them know that community banking is still about that one-on-one personal relationship building.
Good point. John?
As long as our country has capitalism as its economic base, as long as our country has capitalism as its economic base, our industry will still be the people who help people make their lives better. We will be the industry that helps a person finance a new addition to their family, that allows them to buy a little larger, nicer, safer home, that allows them to open maybe a second office or buy another truck for their business, do things that make their family have a better life for the kids behind them. And that's what we all do for a living. And it's an honor to be able to come to work every day knowing that somewhere in our organization we're helping somebody that needs us. And to be able to be the clearinghouse of people that need a safe place to keep their money, and those people who need that money to make their lives better, to be that clearinghouse is an honor, is a privilege in this country. And that makes me believe our industry will always be strong. I don't know if there's going to be more banks or less banks 10 or 15 years from now. I can make an argument both ways. Certainly there's less of us than there were 25 years ago. Maybe that trend will continue. But I think there'll be just as many bankers, even if we don't have as many charters out there, because that need is there. And I think the way that we tell that story to the country will help them understand that bankers are here to help them and help the country. We're part of the solution, not part of the problem. And I would love to finish my career, which God willing will be 10 or 15 more years. I would love to retire knowing that this last decade was our greatest decade, that we contributed to making this country turn from the turmoil it's been through and yield a better future for the people coming behind us. And that kind of gets my heart beating a little fast in the morning.
Great.
I appreciate the privilege.
Thanks, John. Harris?
About a week ago, I was with about 50 different business owners, all family-owned businesses, and a little conference we were doing, and it was so energizing. You get so kind of caught up in trying to figure out QM rules and this and that. And when I get too caught up in that, I have to remind myself you have to go out and be with customers and the people that we're actually there for. And boy, when you do that, I came away from that really fired up and excited about the role that we all play as financial partners to people who are really doing good things. And we have such a diverse economy with people doing a lot of interesting things and lots of opportunities still in this country. I was just really struck by how many of the people in this group that I was with had started their own businesses within the last generation or two and turned them in a lot of cases into really good, great businesses, employing a lot of people, and it's a lot of fun to be part of that process, and that's the hope for all of us. And I think that's what we have to stay focused on, is how do we help people build great businesses and fill their personal dreams, as John said.
Okay. Frank?
A little tough to follow up on all of everyone's final comments here, but I share all of those. We are very optimistic about the future of not only the country but of this industry. We've been blessed to be able to take advantage of it, and we've been growing at 20 to 25% a year. So obviously something's going right. I see an economy that will continue to grow. I think we're in the first couple of innings of this recovery. I think this is a great place for us all to be. I think we could clearly sit here and listen to all the, as John said before, the darkness in the industry, whether it's regulation, whether it's the high cost of doing business and all those other things. But I would much rather focus on, what do my customers want? Who are they? How do I find them? How do I get great people into our organization who are going to focus on finding great customers? And sort of like, what the captain of the Andrea Gale in the book Perfect Storm, which by the way is one of the greatest leadership lessons ever, said, you need to go and fish where the fish are. And that's what we look to do every single day. So where's our customer going to be? Where are they swimming to? What is it that they want? And we need to go there. That's our journey. It's chasing after our customers and finding out what it is they want, how they want it, and how we're going to deliver it to them in the way that they want. And I think that's a little bit different than how this industry grew up, right? We put these great limestone edifices on the best corner in town, and we sort of forced the customer to come to us. Well, that's all changed. And so I think if we recognize this shift in the business, in the model, in what we do and how we do it, I think it's exciting times ahead. It's very exciting times.
Thanks, Frank. Well, I think in general, a lot of as bankers, we are worried about or concerned about the regulatory burdens, where they're going to end up. At the ABA, we continue to fight those issues and try to get things tweaked where we can get them tweaked, change what you can change. But the reality is we're going to deal with a much changed environment after we had our Katrina, our financial Katrina in 2008. But at this point, I think banks, when you talk to people in this group, they're optimistic. They said, yeah, we'll deal with the regulatory issues. They're out there. We'll figure them out. But let me tell you about my business, John. Let me tell you what I'm doing. This is where I'm making money. This is the customers I'm going after. And I think as I go around the country, it's just a much more positive. The regulatory credit crisis is behind us. Now let's figure out a way to make money. I think that's a real positive message, and I kind of sense that whenever I go around the country. I sense that today. People, they want to talk about regulatory problems, but they also primarily want to talk about their business, what they're doing, what customers are working with. It's it's a very positive, upbeat message. So, again, I want to thank our panelists. Obviously, these are 4 individuals I sure follow and try to steal as many ideas as I can, and great leaders across the country in different areas. So, really appreciate your great work, and thanks for being on the panel. And thank you.
Ladies and gentlemen, please thank your panel members, Melanie Dressel, John Hairston, Harris Simmons, Frank Sorrentino, and your moderator,